topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning. Man, it's a Monday morning. We all know it. Things happen. You kind of get lost in the muck of the weekend and trying to get everything going this week. It's just the way it is. You know, if you got questions, tax questions, bookkeeping questions, hey, put them into the radio station here and let us get them answered for you. It's going to be a great morning. You know, we got up, it was raining already this morning, had some things we got to take care of on the ranch, and we get in here and it's pouring cats and dogs. Hey, it is what it is, but taxes are still there. And one of the biggest questions, besides the question my producer had last week of, hey, what's your show going to be about this week? And we went trucking and taxes. You know, it was such a busy week last week. We had more and more truckers calling to get their bookkeeping started with us so that we could actually help them save money on taxes. But the big question came back to us is, hey, we've heard about the tax cuts that are expiring at the end of 2025. If this, as Trump would put it, big, beautiful bill, I still think it's overrated and it still needs to be a balanced budget. But hey, only you and I have to balance our budgets. Can't live on debt forever. Government evidently figures they can live on debt and charge our grandkids, great-grandkids, and probably great-great-grandkids are the ones that are going to have to make up what our generation and generation before us causes debt to go through the roof. I mean, through the ceiling, as you might want to call it. You know, they keep raising the debt ceiling. But what's going to happen if this big, beautiful bill with extending the tax cuts doesn't go through? You know, it should. But, you know, there is a lot of congressmen that are now falling on the side of wanting a more balanced budget. And then you've got the other side that want to spend freely and spend everything and anything, and whatever they can spend is great. But what's going to happen is your standard deduction, first thing and foremost, is going to shrink. I mean, in 2017, before these tax cuts went into effect, your standard deduction was about $6,350 for single filers, $12,700 for joint filers. 2025, these amounts are now $14,600 for single filers, $29,200 for married filing joint. And, you know, so you got all those inflationary adjustments and everything else, so we don't know exactly where the standard deduction would actually fall. It'd probably be around $8,300 and about $16,600 for joint filers. You know, that's just guessing based on, you know, the increases for inflation and other stuff out there. So this is going to have a major impact. Now, you might be able to itemize a lot more that's out there. If you're a W-2 truck driver or even an outside salesperson that doesn't get reimbursed for the mileage they've got to do for seeing clients, or if you're a W-2 trucker, your per diems that you used to be able to get, those might come back. But as an owner-operator, any other small businessman, you're going to see the impact on these things. On the corporate level, one of the biggest changes that the Trump tax cuts put in there, the corporate rate dropped to 21%. And that's a significant drop from 35%. This cut to corporate taxes is actually permanent. It's not going to expire, even if the legislation does. So that's a good thing, because you got to remember, when a corporation pays taxes, they're not paying it out of their coffer. They're paying it out of what they collect from you and I. So when you're at the store or you're buying merchandise, that has the taxes embedded into it. And therefore, you're going to pay it. If that rate was to go back up, they're going to increase those prices and pass it on to you, the consumer, because they've still got to make a certain net income. People don't talk about that. People don't talk about what the corporate tax rate is and what it does to you and I as the consumer. But, maybe they really should look at the impact to the consumer. See, now, when you're paying the tax, you pay your income tax. And then when you go in and buy goods or services, you're having to pay the income tax that they're going to pay as well. See, multiple levels of taxation that you just don't feel it and don't see it. So you think it's great that we're going to tax somebody like ExxonMobil or whatever company is out there, to think it's going to come out of their net income. It comes out of their net income, but only after they collect it from you and I. Something that really will impact you as an owner-operator or as a small business person is that pass-through business income deduction. That could go away. So this is that qualified business income deduction, QBI. It's that 20% deduction that you get to take whether you're a pass-through company or a Schedule C. And, this means that you're a sole proprietor with $100,000 in business income, for example. You can immediately deduct $20,000 of that income and not have to pay tax on it. So big savings there, but that could go away if they do not pass or put into law making these tax cuts permanent. So, many Republicans support it, making it more likely that it'll be extended thanks to, Republican-dominated Congress. However, if they allow it to expire, small businesses, you're going to expect a significant boost to your tax bill. Hey, if you happen to be in the 20% tax bracket, let's say, and you don't get to take off this $20,000, 20% of it is tax now. So, that's $4,000 added to your taxes right there because of this one piece of the law that if it doesn't get passed, it costs you money. One of the things that the Trump tax cuts did back in 2017, it did put some caps on your state and local taxes. It was limited to $10,000. And it was bad news for high income taxpayers in high tax states like California, New York, New Jersey. Many of them paid more than $10,000 in state and local taxes. Hey, you would think Democrats would be for this because it would be taxing high income people more, and it would affect lower class, lower income, middle income a lot less. But a lot of these guys are from these high tax states and want to get every bit of the taxes taken off at the federal level. Things don't always add up and doesn't seem the way it should be. If somebody would actually explain to people what this cap on state and local taxes does, you that say the high income people should be taxed more should be for this. those that want to see lower taxes, lower tax rates, should be against setting this limitation out there, because you should be able to deduct the taxes you're paying at the state and local level to the fullest extent against your federal income tax as well. My opinion, my soapbox. Expanded child tax credit. So you with children. One of the Trump provisions that assisted the lower and middle income taxpayers was the expansion of the child tax credit from $1,000, it was up to $2,000. Now, this extension of the elevated tax credit is supported by both sides. Some on the Republican side are a little opposed to it, but I think everybody is for it because it does give money back to the families with children. So, we can see some of these things being passed, but some of these things, may take a little bit more to get over the hurdle, because what they're looking for is more and more money coming into the federal government, into their coffers. Now, they don't care what the impact is to you or I or anybody else in America. What they are concerned with is how much money they can get coming into the coffers to redistribute or spend or overspend, whatever it may be. Hey, right after this break, we're going to talk about some more of the things that will happen if they do not pass the Trump tax cuts from 2017. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, Jerry, thanks for tuning in and asking the question about is there a simple way to do trucker bookkeeping? Absolutely. The first one is a given. You call Trucker Tax Tools and we'll help take care of you. We're going to go over later in this segment or the next one some of the processes that you can do as an owner-operator for do-it-yourself, bookkeeping. And we're going to talk about it, come back to that and talk about it. But very good question. And I hope you're being safe out there on the road. Let us know where you're at. If you're tuning in, go ahead and text us and chat with us or even call in. Let's talk to you and you can tell us how your trip's going and where you are in the country. We always laugh because we're at the truck shows and we're talking to people. We always tell them we'll take phone calls from you no matter where you're at. If you're in your truck driving, unless you're driving through Nebraska or West Texas, because we just know you're calling because you're bored and there ain't nothing else out there. We always laugh with our truckers about it just because we're having fun. We'll take your call anyway. But we will cut you off after a little bit of time if you're really, really bored out there and just want to talk about bookkeeping and taxes, which generally turns into family, ranching, friends, you name it, we go through. You're friends of ours, so you can appreciate that. Hey, some of the other things that do change if they do not pass the Trump tax credits or extend them. The Trump tax credits reduce the property values on which homeowners can deduct their mortgage interest from $750,000 or to 750,000 from $1 million. If the Trump tax credits expire, then the $1 million limitation would be back in there. The Trump tax credits raised the limit on deductions for charitable contributions to 60% of adjusted gross income, up from 50%. Before the legislation passed, the 50% limit would also be reinstated if Congress didn't extend the Trump tax credits. Now, if you're giving that much money to charity, hey, God bless you. And hopefully, it's some really good charities out there that you're supporting. And it means you're making some really good money, and maybe you're debt free and you don't have to worry about it. One of the other things the Trump tax credit did is boosted estate and gift tax exemptions, and those could be repealed. Well, this affects only a small percentage of Americans, but it is about, passing on family, maybe family land, maybe family businesses. Maybe you run a small business that has become worth quite a bit and you're trying to pass it to your family. The gift, the estate, those taxes can hit you hard. So for 2024, the estate tax exemption is $13.6 million. But if that legislation expired, it would go down to $5 million. So if you've got land maybe that's been in the family for years and it's become worth a lot, and we've known a lot of ranchers and family people that have had land that has passed on generation after generation and now be worth maybe 6 or 7 million. Well, they're going to be paying a high percentage of the other couple million. And a lot of them, people can't afford to pay those taxes on that inheritance, and they have to sell their property or their land, which is really, really sad. You even see that today, house values where they've gone up, and it really could impact you or the family. So in basically looking back at this, if Congress doesn't extend the Trump tax cuts, Americans are going to be stuck with one of the largest tax hikes in history. The average taxpayer, is going to see a 22% tax hike. The average family of four is going to see at least $1,700 tax hike. Child tax credit is going to be cut in half for 40 million families. Nearly every taxpayer is going to see their guaranteed deductions slashed by more than half. 26 million small businesses are going to be saddled with a huge tax increase. This could be a very big problem for here in the United States. It would probably, if this doesn't pass, be something that could very much hurt the economy. It's going to hurt yours, mine, and everybody else's pocketbook, and affect this country for probably years to come. Granted, over a couple of years, everybody will get used to it, but who really wants a 22% tax hike? Which of the 40 million families are willing to give up their child tax credits? Small business people that are trying to run a business, to see a huge hike in their federal income tax because they lose the qualified business deduction. Not you, not me, not any trucker, not any owner operator out there. These are the things that matter. So, hey, if you really want to push this through, I say, hey, call your congressman, call your senator, let them know that they got to pass and make permanent the Trump tax credits, tax cuts. That's what you want to do out there. And we were talking about, from Jerry, the question about bookkeeping and making it easy and the do-it-yourself process. The question comes down to, do truck drivers, owner-operators need bookkeepers? Depending on your circumstances and your preferences, absolutely. I mean, if you love coming home, working with numbers and sitting down and sitting at a computer and trying to figure out your expenses and want to do your bookkeeping and maybe put it in a spreadsheet and then try to figure out how to summarize everything for your tax preparer at the end of the year, and then fret over, do I have all the deductions and everything else? Hey, do-it-yourself bookkeeping might be for you. Do-it-yourself bookkeeping, you can keep track of these expenses and income, maintenance records, parking, receipts, repair records. But if you work with a bookkeeper, it can allow you to remain organized, help you identify cash flow and cash flow problems, streamline your bookkeeping, maximize your tax deductions, and help save you money. But in order to keep your books in order, as an owner-operator, keep a logbook. Make sure you review your finances. Keep your business and personal accounts separate. Save all your receipts. Update your books regularly and often. So, keep a logbook. It's to help you keep your finances in order. It can be digital, it could be physical, whatever you're easier to work with. If you keep a digital logbook, keep it backed up so that you don't lose anything. And if if something goes wrong on your phone or on your laptop or on your tablet, wherever you're keeping track of it, you can lose documents. Something goes wrong. So keep it back up. Make sure you're tracking everything, all the expenses that are there for your business, and then review it. It doesn't mean just look down there and look at the numbers. It means run the numbers. Look at your cost per mile. Look at the costs that are going out. Are they ordinary and necessary? Are you spending money that you shouldn't be spending on things that you don't need or aren't required to run your business? First goal is to make a profit. Second goal is to put money away for retirement, savings, emergency funds, money for repairs or maintenance, future repairs and maintenance, something that will help you get through when that inevitable problem happens. We always tell people, keep your business and personal accounts separate. It's kind of like trying to keep everything in order in buckets. You've got a bucket here for your family, and you've got a bucket here for your business. And only business should be coming out of the business bucket, and personal comes out of the personal. Not a combined bucket, but separate buckets. And then last, save all your receipts. Keep them in good order. Hey, we tell you this because people have learned a lesson the hard way. And we'll talk about some of those lessons that people have learned right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We were talking about buckets, not for catching rain or water, but the different buckets that you use for your business to capture your expenses and your income and where it should go. Now, there's problems when you have one bucket that you're using for business and personal. Now, first, if you are an LLC or an Inc., you're set up as a business, a separate entity, having one bucket, as most lawyers will tell you, it breaks what they call the corporate veil. Now, I'm not an attorney, so don't take this as legal advice. I'm just an enrolled agent, never wanted to be an attorney. Matter of fact, I don't like most attorneys. But I do have friends that are attorneys that we do use because they do serve a useful purpose. Unfortunately, you have to have one that's a friend somewhere. But, you got to have separate buckets out there for that corporate veil at the very least. But the other problems you run into, and you have one bucket and you go through an audit, the IRS is looking at everything that went in and out of this bucket. So if you've got a separate personal bucket and only personal things went out of it, it's easy to track and show them that this money was transferred from the business either in payroll or distributions and went into the personal, and the personal paid for it. Over here is the business bucket. Everything that went into the business bucket was business. Everything that went out, expenses and everything else, was business, not personal. All business. And then you make the transfers for distributions and payroll over to the personal, and then we go from there. Keeps it cleaner. If you ever go through an audit with the IRS or state taxing, you can go and show, hey, this bucket over here was all business. And then it becomes easy to identify the money that went in and transferred were distributions from your business or was payroll from your business. And I do this whether you're doing a Schedule C, a 1065, an 1120S, and definitely an 1120. So whatever tax forms you happen to be using, those are the ones that we've got to sit down and we've got to look at. So we've got to make it make sense. Now, as an owner-operator, truck driver, your tax situation is unique from other businesses. You do file and pay taxes just like any other business owner, but you're also eligible for deductions that are specific to you as a truck driver. And so if you need more information on how to file and pay taxes as an owner-operator, truck driver, we're here to help. Matter of fact, just give us a call. We can set you up on a very low weekly fee for our owner operators. We start at $25 a week. But we make it really simple. All you got to do is call 877-966-2477. Again, 877-966-2477. You're not going to talk to a salesperson. You're going to end up talking to one of our staff here, that our receptionist or me, or one of our admins, and we're going to talk about what we do and how we can help you. I was talking to a trucker just the other day. We signed up quite a few last week, so hey, we're getting them started. But he goes, I just need to know you're going to make it easy. Yeah, we're going to make it easy. You can either send us an email of PDFs of your bank statements, your credit card statements you use in business, your settlement statements, your financing agreements, and things like that, and we take it and run. Matter of fact, if you give us accountants access to some of the banks, we can pull the bank statements ourselves, credit card statements ourselves. and we can get them right into our system to where we do things better and faster for you. Settlement statements, you can email them, put them in our secure portal, whatever you want to do. We're going to make it easy, because the last thing you want to do is spend time helping us gather all this information when you're home with your family, when you're supposed to be spending time with them. Couple of things that you need to be doing as an owner or operator. One, make your estimated tax payments. The IRS does require you to make quarterly estimated tax payments based on your business profits. Now, being self-employed, if you're running a Schedule C, you've got to cover the self-employment tax, which is the 15.3. You've got to cover your federal income tax and your state income tax. So if you're expecting to owe more than $1,000, you have to make quarterly estimated tax payments of both self-employment and income taxes. Now, we calculate these things for you, being a client of ours, and tell you, hey, these are the estimates that you should be making. Now, we'll also do a lot of tax planning with you to make sure that, hey, we're getting all the deductions. We run what we call a tax minimizer to make sure that there isn't any deductions that you should be taking that you haven't been taking, especially when you're doing bookkeeping with us. And the other side of it is we're looking to help you maximize your profit. That includes taking every deduction you can, making sure the deductions that you are taking are legit, making sure the things that you're paying with after-tax dollars that could have been pre-tax are moved to the right bucket so that you're getting the deductions. So sometimes maximizing deductions saves more money in your pocket from taxes. So we've got to look at everything that is out there. So, when we're estimating tax payments, we're usually running on the safe harbor method, which is calculated by looking at your prior year's taxes and calculating the right amount and then saying, hey, you got to pay these over the next, 4 quarters. Now, the other amount that's a little bit harder to do is your actual estimates, but it is useful. You're not paying more than you should, but a lot of times, when we're trying to do this, you're a little behind on getting stuff to us, so it makes it a little bit more difficult. And we got to look at the ebbs and flows of your business. So if you're new, trucker, owner, operator, even independent contractor, you're better off using the actual income method for estimating your quarterly taxes and not necessarily using the safe harbor. Now, if you've worked a really good job, we got to look at the safe harbor too, because you may have a lot more taxes that you have to pay in as estimated taxes unless we can make sure that we get the actual right amount based on your actual expenses. Now, we look at every tax deduction out there that you can have as an owner, operator, even a small business owner. You got to look at every tax deduction that's there. As an owner or operator, you may have a lease payment on your truck. It has to be looked at. Is it right? Is the lease payment a operating lease or a capital lease? Got to make sure you have the right definitions there. Making sure you're deducting all your fuel expenses, your bookkeeping and tax fees, your office supplies, maintenance fees, your uniforms, your truck supplies, licenses and permits, training, communications, insurance. So any expense that you have record of and is ordinary and necessary for your business can be considered tax deductible. We have an extensive list of items that are tax deductible. Matter of fact, when I speak at Truck to Success, OOIDA Foundation's Truck to Success seminar, mainly for truckers that are looking to move from maybe a W-2 driver out to being their own owner-operator, their own business owner, or even owner-operators that are looking to expand their business and get their own authority and want to know all the rules and regulations all around that. When I'm out there speaking, we go through an extensive list of tax deductions and deductible expenses for you as an owner operator. Now that list is quite extensive that is out there. And so, we try to make this easy and simple for owner operators that are using us for their bookkeeping and taxes. And we have to make it as easy as possible for you, the owner operator. Now, you as an owner operator and you as a small business owner, sometimes you're worried about risks of audit. What happens if I take too many deductions? What happens there? We come back after this break. We're going to talk about reducing the risk of audit on your business. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Well, welcome back. Risks. You take risks, you get behind the wheel of a big 18-wheeler and you're driving down the road. We take risks every day. When, you get up in the morning till the day, go to bed at night, risks. But you can reduce one of the risks out there, risk of audit on your business. The IRS is always tasked with selecting taxpayers for audits. It's enforcement. The threat of audit keeps people honest, sometimes to the extent of not taking deductions that they should be taking. But the IRS selects taxpayers for audits in basically two ways. The first is they suspect dishonesty or practices that don't adhere to the tax law. The second is random selection of tax returns for audit to check tax compliance. Now, if you want to reduce the likelihood of a tax audit or reply to a random audit, it's important to claim tax deductions and tax credits for which you have documentation and support. Without supporting documents, the IRS may disallow the deductions or credits and then charge interest penalties, even fraud penalties. Now, reducing the risk, 1, save your receipts. 2, don't take deductions that you don't have support for. We tell people this all the time when we've seen it. You didn't do your bookkeeping, you gave round numbers. Round numbers is going to be a big target in your business. Using numbers that are disproportionate to what your business is. The IRS computer systems randomly choose people, and sometimes it's based on percentages. I'll give you a good example. And we're going to come back and we're going to talk about per diems in a minute, but somebody came in, they did $150,000, and I'm using rough numbers here, in gross trucking income. But they claimed that they spent $60,000 in meals while on the road. Now, that's really exorbitant and really doesn't pass the smell test. We had to ask him, how many nights were you on the road? And he sits there and looks at us and says, well, I was on the road 300 days. Okay. You were spending $200 a day in food. Well, I had to order out and I had it Ubered to my truck every day that I stopped. That's still quite a bit of money. It does not make any sense whatsoever. Well, I'm on a health kick. Okay, that still doesn't make any sense. Thank God we weren't doing the bookkeeping for him. We actually talked him into actually taking per diems for the nights that are on the road instead of taking what he claimed that he could support, but he said he paid cash. Life is life, but those are the kind of things that get you into trouble. So keep your receipts, keep your canceled checks, keep your logbooks or any other valid proofs of payment documentation, and keep it for a minimum of 3 years. Don't take deductions that you don't have support for. Don't take deductions that are out of the norm out there. If you're deducting $5,000 in office supplies for paper and pencil and stuff like that, and you're a trucker, you're probably out of the realm. So kind of keep an eye on what those expenses are. One of the expenses that truckers get that is unique to their industry is per diems. Now, unfortunately, a W-2 driver cannot take per diems because it was removed in the Trump tax cuts of 2017. Unreimbursed business expenses that W-2 truckers used to be able to take, they can't take them. Their company can pay them per diems that are non-taxable, but they can't take this as a tax write-off on their taxes. But as an owner or operator, truck driver out there, per diems is one of your largest tax deductions you get to take. In the easy terms, per diem deduction is a tax deduction the IRS allows to substantiate ordinary and necessary business, meal, and incidental expenses paid or incurred while traveling away from home. Right now that had been increased October 1, 2024 to $80 per day in the continental U.S. Now, you may hear the amount of the deduction quoted as $64 because the IRS only allows you to take 80% of the per diem. So there are changes as the IRS has gone through it. A couple of years, the IRS allowed 100% per diem, but it's now 80% of that $80. Now, the per diem rate last year from January 1, 2024 through September 30th was $69. So you have to, for 2024, calculate your per diems, the number of days on the road from January through the end of September, and then October through the end of the year. So, if you're an owner operator, you get to claim the tax deduction for each day that you're away from your tax home. Now you got to have a home. Otherwise, if you don't have a home that you're maintaining and covering expenses for, you're now considered a tax turtle. Your home is your truck and you're not getting these per diems. So you got to calculate the days that you depart and the days you arrive home. And you only get a half day for the day of departure and the day of arrival. And then you get a full day for everything else in between. So, it's one of those things you got to make sure you're calculating and you're going through and doing the correct way. One of the other things that you can take advantage of, depreciation, Section 179. Now, we've kind of got to look at this thing and weigh this thing out. Because, I've heard a lot of people that are in this tax industry and they look like a hero tell you to go buy a new truck because they're going to save you a bunch of money on your taxes. Well, what they're doing is using your depreciation to make them look good. First thing we tell our truckers and ask them is, is there a reason or a purpose? Maybe you have a lot of repairs that you're doing to your truck over and over again. Yes, maybe it's a good time to be in that truck. Maybe you need better gas or fuel mileage. Maybe a newer truck would provide that. Maybe you're going to be transporting in that god-awful state that has rules about emissions that are above and beyond anybody else, and you got to have a newer truck to be able to go and haul in that state. These are all good business reasons, potentially, to get a newer truck. And then take depreciation, whether it's Section 179 or bonus depreciation. We look at that. Section 179 is basically using the first year expensing, meaning that you get to deduct this long-term asset here currently. Now, as one of our other clients, we advised them against using Section 179 because they were looking to shut down their business, and he was going to become a W-2 driver. They said, no, we want the tax savings today. Got them their tax savings, and the next year they sold their truck, and subject to ordinary income capital gains on all of that, and owed a lot of taxes. Not extremely happy, but they didn't listen when we were telling them what was going to happen, and now they owe taxes that are out there. So you've got to look at it. There are thresholds, there are maximums. Most of the trucking companies we know are not going to hit them, and most of them aren't going to be phased with the phase out there. Now, if you happen to be running 5, 6, 10, 20 trucks, yes, your business is probably going to have a lot of gross income, a lot of net income, and maybe you might hit those thresholds. The one good thing about Section 179, you don't have to claim the full amount. It's up to you to decide how much you're going to deduct under that Section 179. But whatever amount you don't claim must be depreciated over the useful life of the asset. So the main advantage of 179 lets you take a higher deduction immediately by receiving higher depreciation deduction today. You'll get to reduce your current tax bill. It's especially helpful for a new business that may be having cash flow problems. Some of the disadvantages of this: your income increases, it'll move you to a higher tax rate. By accelerating your business deductions, you'll have fewer options in the future to reduce your taxes when your business might be in a higher tax bracket. You also have a higher risk of recapture of that depreciation when you sell that long-term asset. Things you got to consider and look at. Proper planning is what's going to make and help you make the best possible decision on your depreciation. We enjoy talking about taxes. What do you want to hear? What questions do you have? Hey, if you go over to Trucker Tax Tools, truckertaxtools.com, go to our contact page or go to our email, support@truckertaxtools.com. Send in your questions. I'll address your questions next week right here on this show, because we're here every Monday, 10 a.m. Eastern Time on taxtalk4u.com. Hey, if you go over to Facebook, follow us over there. Never miss an episode. We get to talking about taxes, trucking, owner-operators, small businesses, tax relief if you owe the IRS. Hey, we got a great podcast called Tax Solutions 101. You want to know how to solve tax problems? Hey, that's a great place to start. Or go to truckertaxtools.com. Let us know, hey, what's your problem? What issues do you have? And we will come up with a way to solve those for you as quick as possible. Hey, we enjoy bringing these things to you. You got to let us know what we can do to help you. If you call us at Trucker Tax Tools, 877-966-2477. Again, 877-966-2477. You can join our fleet of truckers that do bookkeeping with us. We've been so privileged to help thousands of truckers over the last 10 years with their bookkeeping, with their tax problems, and tax solutions. We bring you that information right here at Tax Talk for you. So connect with us here. Thank you for being with us. You have a God bless and very glorious, safe week in all that you do. And we'll see you next Monday, 10 a.m. Eastern Time, right here on W4CY Radio and TaxTalk4U.com. Thanks again for tuning in. Have a great week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at TaxTalk4U.com. See you next week at W4CY.com.